Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, June 14th, 2018. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. Our hypotheses are our trade plans. We do not know what the market's going to do. Therefore, we create a plan, multiple plans based on who takes control of the market. We wait to see what happens on the open, who takes control, and then we execute the plan that best suits the market. If you're watching this video on YouTube, the hypotheses are going to be about 15 minutes in. This whole session is going to take about 20 to 23 minutes. I do not skimp on the context. We lead up to the hypos so that you have the context of where the levels are coming from and why the hypos are what they are. So if you want to skip ahead and miss the context in the video, that's fine, but we do a routine. I don't veer from it. It is basic in some sort, but very important nonetheless. So this is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the pre-market, and then we do live trading and analysis during the course of the regular trading day for our members. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So taking a look at yesterday, we were looking for continuation. We had two main hypotheses that were equally weighted, and they went up into the 2 o'clock. It was the FOMC announcement. We were looking for a open auction just in range, just out of value, a move down to test the value area, and somewhere between the value area high and the VPOC, we were looking for a rotation up into the 98 area and going sideways into the Fed in the 98.50 area. That was Hypo 1. Hypo 2 was an open auction, a push up, take out the overnight high. We were looking for the overnight high to be taken out, and we were looking at the overnight low to be taken out in this scenario, just like we were the prior day. And the prior day, this day right here on Tuesday, we missed the overnight low by 2 ticks, but in this scenario, we got the overnight high at 96, and we got the overnight low at the 88.25. We basically held inside of the prior day range, fighting the value area up into the 2 o'clock announcement. The FOMC came out with a rate increase by 25 basis points. We have a scene of the crime at 791.75, and then we got our impulse wave, our pullback, and then our continuation wave. Buyers stepped in, rotated it right back to the scene of the crime again, failed to get back and hold above the open, and then the sellers took it into the close, and we closed with a weak low with a neutral extreme. We broke the high, we broke the low of the IB, and then we pushed down. We are looking for continuation. Okay, anytime you see a neutral extreme and a close at the high or the low, you're looking for, I call it an auction interruptus. This is an interrupted auction, meaning that we were going to get some continuation in the Globex, and we got continuation down into the 72.25 in the overnight session, and they've since buyers have stepped back in and rotated us all the way back up to that 89 again. That 89 area has been a lot of consolidation in that area, and so far we're seeing some sellers step in again, and we're back down in the 85.25. So taking a look at the news for today, we did have core retail sales month over month came out at 8:30 Eastern time, and it was a beat. The continuing jobless claims was a beat as well. So more positive news at 53 minutes from now. We've got Bloomberg consumer confidence, and then we've got business inventories at 10 o'clock. We've got natural gas at 10:30, but basically not a lot of other major news beyond what we've got at the 8:30 time frame. Taking a look at the macro to micro, I always start my day with a very simple candlestick chart. Whoops, that's not the one. And I start with the monthly. I do this every single day, and it is a basic routine, but it is very important. And what I do is I use a 9 EMA and a 20 SMA. These are the moving averages that I use on all my charts. And what I'm looking for is slope and separation, strength of the trend. Is price paralleling the 9, or is the trend being challenged by by breaking the 9? Or is it being violated by breaking the 9 and the 20 and possibly getting a trend change? You can see that wonderful, 14-month of one time framing up on the monthly. February, we violate the one time framing, and then we come down and we fight the 9, but we're failed to get and close below the 9 on the monthly. And then in May and June so far, we've bounced off of the 9, and we're getting continuation pattern. We don't even violate the trend until we get back down below, or challenge the trend, I should say, until we get back below the 71 and 3/4. What did we do? Overnight, we went down to 27.72, and we bounced from there. So we're nowhere near getting to violating the trend on the bigger picture. Going to the weekly, we had this long trend up, and then we looked like we were getting a possible change of trend, but then they took that back, and so far it looks like we're going to get a continuation pattern here. We don't have a lot of slope or separation, but we are above the 9 and the 20, and we don't challenge this continuation pattern until we get down into the 27.37. And if we break the 27.37, there is a naked cross right here at the 27.12, and I would be targeting that if we broke below the 37 on the weekly. Going to the daily, you can see that we are back in this continuation. They came down and they challenged the trend, and then they popped back up, and so far we're holding above the 9 and the 20. On the overnight session, we did come down and challenge the 9 again, and we've bounced off of it so far. And even though we've got a bearish engulfing candle, the buyers are absorbing the selling, and we're more likely to continue up into the 2800s, even if we get a bit of a bigger pullback. So the trend is intact on the daily. On the 4-hour, it was looking like we were going to see a possible trend change on the 4-hour. What do? They take it back, and right now we're trading just below the 20 on the 4-hour, and possibly getting a pop above. So watch this 87 area. If we can get back above there, we just challenged it in the Globex by putting in a new Globex high at 89.25. The other level you want to pay attention to, of course, is going to be the 84. I'm watching 83. 83 is going to be basically my over-under line for the day. Going to the 30-minute, you can see that they took it down, and we were getting this downward trend, and then they've taken it back on the news, and now we've got a possible trend change to the upside. And even if we come back to the 81.25. And I'm still thinking it's the 83. So let's take a look at the structure of the market and put some context to this. So we base here down here. Last year, in February and March, and then we get this beautiful upward trend. Okay, putting in new all-time highs. Now, we have what we call an unequalized all-time high. Our RTH, this is a regular trading session chart only, in the regular trading, the RTH, our all-time high is 84, but the actual all-time high was put in the Globex, and it is at 87 and a quarter. So we have what we call an unequalized high. Do the back test on this. Statistically, all-time highs that are put in the Globex are challenged at some point in time in the RTH. And broken. Then we tried to hold value in the 2800s. They couldn't hold the value. They fell down. They came all the way back to a previous price acceptance where we started this trend to move up. Buyers stepped back in, tried to get us back up into the 2800s, failed again at an area of former price acceptance. Then we rotate back down. We put a higher low in, come up, and then we start chopping in this large value area. And we have a double distribution within the microcomposite, and the VPOC shifted from the lower distribution to the upper distribution. The microcomposite for a smaller time frame from the gap up day here on May the 9th. It also coincided, so we had price acceptance back at a longer time frame microcomposite VPOC. Then we gap up, break out of the value area, consolidate for 2 days, accept value above in the breakout. Then we break above, we put 3 days of balance in, and then we break above. And so far, we've got a balance area that the sellers continue to step in here at the 90, 92.75, 93 area. We get a bearish engulfing day on the FOMC news. They come down, they poke down into the 72 area, and then they pop back up, and we're back inside. The value area low for the 3-day microcomposite is 85.50. And even if I put another profile, do it this way, if I put another profile and bring in all the days of the breakout, the most traded price is still above us. So we are getting capped up here at 93. If we come up here and we accept this 92.75 again, look for them to go into the 2800s. We need to break above that. Or have the VPOC shift down, and the likely shift of the VPOC will be down here to the 72.50, where the buyers stepped in the overnight session. So if we come down and test that level again, and we start chopping in this area, watch for the microcomposite VPOC to shift down here. That'll be a clue to get long, okay, into the 89 to 93 area, and then hopefully come up and accept that. Key levels to pay attention to right now on the bigger picture is this 83. That's going to be our over-under line, 77.50, and then the 72 area that we just talked about. Our key line in the sand above is going to shift down from the 2802.50 down to the 2798.75, and our key line in the sand, believe it or not, below us is still below at 2745.75. We can come all the way back down here and test the composite, the microcomposite value area high, and not even come close to challenging this breakout and this price discovery that we're currently in. So taking a look at the overnight inventory, the overnight inventory is pretty mixed. I'd say it's about neutral right now. We are seeing some volume coming off in this 86 level. We're likely to get a VPOC shift from the VPOC down here to this level. If we trade enough, it's coming close to getting a shift, and I'm looking for a shift here into the RTA session, and that's going to confirm the possibility of a continuation. Most people would be telling you right now that this bearish engulfing is a very bearish sign, and that you'd be looking short. I think it's not. It's because of if you look at the actual profile. Let me just take this off. If you look at this actual profile for the last 2 days, and we've been talking about this a lot, the value area is very blunt. And we've been seeing a lot of this, even in this profile. The value areas are boxy. And what does that mean? It means that short time frame traders have been in control, and there's no real consensus of price acceptance within value. So we have these wide value areas, which leads to wide rotations. And to me, it's not necessarily negative. It's just they're exploring back and forth. And I don't get bearish until we get below the 77.50. And even then, I'm only looking for a move back towards this 50.50 and the 45.50. But if we hold the 72 area, I'm still in a very positive situation, and my bias is to the upside. So taking our levels from the overnight, our overnight low is 72 and a quarter. Our overnight high is 89 and a quarter. So our 20-period daily full session average true range is running at 24.79. So off of the 89 and a quarter, our downside daily ATR target is down at 64.50. And our upside daily ATR target is all the way up at 27.97. This becomes our key line in the sand, so we move this down here. And we move, we already have a trade level there. Sorry, just let me, okay. So our key line in the sand is above at 97, and that gives us a capability of range, okay, based on the overnight high and overnight low of either coming down to the 64.50 or all the way up into the 27.90, 97, 98.50 area. So in terms of hypotheses, and again, the VPOC is down here at 80 right now. So I'll wait to put it in. It's likely going to shift to the 86. So I'm just going to wait to put that in. You can put it in on your own chart. So what's my hypothesis for the day? I'm looking for an open auction. We're in value. We've got a wide range. I'm looking for a wide opening swing. I'm looking for a move down between the 85 and the 83 area, basing here and then pushing up through into this 92.50, chopping in this area, accepting the microcomposite VPOC and the price acceptance, and then I'm looking for continuation and a push up into the 98.50, and then chopping here with possibly a late day probe up into the 2800 centennial number. That is my hypo 1. Now, because of the bearish engulfing, my hypo 2 has to have equal weight, which it's been doing a lot lately. But hypo 2 will be an open auction in range, a push up into the 92.75, and somewhere between the 92.75 and the 96. I'm looking for responsive selling to step in, rotate us down to the value area low, chop between 85 and 83, and then push through the weak low that was created here and push down into the overnight low and come down into this 3-day microcomposite VPOC, find buyers, and then rotate back up and close somewhere near or just inside of the prior day low. That is hypo 2. Hypo 3 is a breakdown day and a trend down, a open auction, failure to get above the prior day range. Sellers step in strong, take us down to the 83, chop here for a bit, and then completely slice through the prior day low, pushing to take out the overnight low, and then chopping here and then getting a continuation wave down towards the 3-day microcomposite VPOC down here at the 27.60.75 and closing back down here. That is hypo 3. Hypo 4 is a continuation trend up, open auction in range, failure to break below the 82.75, buyer step in early, take us up into the 92 to 96 chop here, and then get a breakout and a continuation and a push into the 2800, 280250 chop here, and then push up into this 2810 to 2813. Find sellers, rotate down, and close between 2802 and 2805. That is hypo 4. There is a fifth hypo, and that is a inside day where we play ping pong between the two high volume distribution zones and fill in this area right here in around the 89. This 89 has been very choppy, and where we're seeing two-sided trading from the short time frame traders. So hypo 5, the alternative, is an inside day chopping between the 92.50 and the 85 to 83 level, and just going sideways with a 8 to 9 point range. So that is the alternative hypo for the day. And then going to gold. Gold, we got our breakout. Man, we've been waiting for this to happen. So we have to wait to see if it gets continuation. We talked about how important this 1309 level was. We broke above it and tested into the 1311. Our high so far is up at the 1313. If we can hold this 1309 coming into the RTH session, I'm looking for the continuation back up into the 1150 and a push to the 1319 and back into this balance. If we don't hold the 1309, look for them to rotate back to the 1305, 1306 and start chopping here between the 1300 and the 1306 area and going sideways yet again. If we break below the 1300, I move back to the 1295.90, the most traded price going all the way back to October the 24th, 2018. So that's what I'm looking at in gold, but I think that we're going to start shopping in this area between 1309 and 1319 and accept this 1311.50 to get the continuation pattern up into this next key target above, which is up at the 1329, 1330 area. So that's what I'm looking at. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.